Today we're going to talk a little bit about some of the differences between traditional IRAs and Roth IRAs. Both of them are designed for you to help save you for the future, and there's fundamental differences between the two of them and how they're used as it relates in particular to the timing of taxation. They're both retirement accounts and they're both an individual retirement account, and so we're going to talk about how they help you save for your future and some of the differences between them. Let's start with the traditional IRA. So a traditional IRA is typically a pre-tax contribution. Whether or not it's truly pre-tax depends on your income and whether or not you're covered by a workplace retirement plan. But for the sake of today's conversation, we'll look at it as a pre-tax opportunity. Let's start with the traditional IRA. Whether or not a traditional IRA is truly pre-tax depends on whether or not what your income is and whether or not you're covered by an employer-sponsored plan. But for the sake of this video, let's look at traditional IRAs as being a way to save for your future on a pre-tax basis. So what that means is that you'll make money this year. You're going to say, I'm going to save for my future, and I will put money into an IRA. That money won't be taxed when it goes into your IRA, and then it will grow tax deferred until you retire. So if you retire in 30 or 40 or 50 years, that money is going to continue to grow and compound on a pre-tax basis until the time that you retire. When you retire, that money would then come out and be taxed as ordinary income at that time. So the main benefit of a traditional IRA is that you're getting a pre-tax savings. So let's switch gears and check out a Roth IRA now. So if a traditional IRA is pre-tax money, a Roth IRA is after-tax money. So all that means is that the government is saying, hey, we're going to give you the opportunity to save on an after-tax basis for retirement, and you're going to be able to make contributions that are already taxed that will go into a retirement account, and it will grow tax deferred. And since you've already paid tax on that money, when you take it out in 20, 30, or 40 years, whatever it is, that money will come out tax-free. So the main difference between the traditional IRA and the Roth IRA is going to be where you're taxed. Roth IRAs, after-tax money going in, after-tax money coming out. One thing to note with Roth IRAs is that in order for the distributions to be qualified as tax-free, some conditions need to be met, such as holding the account for at least 5 years and being 59 and a half or older. So there's some caveats there that you need to be aware of should you choose to utilize a Roth IRA. If you're able to use it, having tax-free income down the road is not a horrible benefit to have either. So what are some of the main differences between a traditional IRA and a Roth IRA? We've already talked about it a little bit, but the main things to consider are when are you taxed and how are your distributions taxed. Traditional IRAs are pre-tax money going in, which means it's pre-tax money coming out. So you'll pay tax on the money as you take it out and it counts as ordinary income. Roth IRAs, on the other hand, are after-tax dollars going in, after-tax dollars coming out. And so those are some of the main things to consider. There are some other considerations. For instance, if you have a traditional IRA or pre-tax retirement money, there is a required minimum distribution. And as of the time of this video, you have to start taking money out when you turn 73 based on your life expectancy and the value of the account. So that could force you to take income later in life, and you may or may not need it to live. So that could be a drawback for some people thinking about utilizing a traditional IRA as part of their retirement planning asset location plan. But again, the benefit is that you're reducing your taxable income during your working years, and typically your pre-tax income bracket is probably higher than your retirement income bracket. So for people who that might be the case, it might make sense to get the tax savings today because you're going to pay a lower tax rate tomorrow. It's not everybody and it's not for sure, but it's something to think about is what's my tax rate today and what's it going to be tomorrow, and do I want to pay tax now or later? Another main difference is that anybody can contribute to a traditional IRA on a pre-tax basis. Whether or not you get the pre-tax deduction will depend on your level of income. So there is a question of whether or not you'll actually get the benefit of having that tax deduction today. But for the Roth IRAs, there is an income limitation. So as your income grows, the ability to contribute directly to a Roth IRA does wane. So you want to be making sure that if you choose to contribute to a Roth IRA, that you're not violating the income thresholds and the income phase out. Another consideration that some people think about when they're looking at whether or not to use a traditional IRA or a Roth IRA is what they're hoping to achieve from an estate planning perspective. So for some people, they're thinking, I don't really need all of my retirement money, so I'm going to put money into a Roth IRA because I want to pass that on to my heirs. And money that's passed on to heirs via a Roth IRA, those distributions are also tax-free. So if you're putting money away today and you're thinking, I don't really need all of this, you could have the entirety of your lifetime, you could have this tax deferred growth in a Roth IRA, and then it passes on to your heirs where it can continue to grow tax deferred, and they'll have to take money out each year subject to some distribution requirements for inheritors, but you'll basically have another 10 years under current tax law of tax-free distributions. So depending on how old you are now, how old you expect to live to, and who your beneficiaries might be, there is a potential tax benefit for saving in a Roth IRA now versus pre-tax IRA. So let's take a look at which one's better. And the answer is that it's hard to say because there are so many considerations like your income bracket, your expected future income versus your income today, what your goals are with the money from a spending and inheritance perspective, and so from thinking about it from an estate plan. So when it comes to whether a traditional IRA or a Roth IRA is better, the answer is it depends. And typically what we see is that it makes sense to have a mix of both pre-tax money that you're getting the benefit of the pre-tax savings, getting the tax deduction today, and Roth money where you're having this tax-deferred, tax-free distributed growth down the road. And so what that allows you to do is have different buckets to pull money from a tax perspective so that as you get older, you can better control your taxable income on a year-to-year basis. So that's typically how we start to think about things is where is this money intended to be? When do you intend to spend it? And how can we reduce the future tax liability or the sum of all the taxes that you're going to pay for the duration of your life? What can we do to minimize that number utilizing a combination of Roth IRAs, traditional IRAs, taxable savings, etc. So it's situation dependent how much or whether or not you want to use pre-tax traditional IRAs or post-tax Roth IRAs in the context of your planning setup. But what we'll see is that many people like to use a combination of them as part of a diversified tax strategy and tax plan. So again, it's really hard to say whether or not this is going to be better for you. So we recommend that you speak with somebody to better understand your personal situation and goals. So that way, any recommendation of utilizing one or the other or both makes sense for you in your situation, given where you are today. If you have any questions, we've got a complimentary retirement planning checklist that you can check out. Also, if you have questions, though, please reach out. Happy to provide some personalized guidance on how we think about and approach the question of whether or not or how to use traditional and Roth IRAs in the context of financial and portfolio planning. If you found this video helpful, please don't forget to like and subscribe and follow along with us.